Hey, it's Andrew here from the Investor's Way, and welcome to Woody's Weekly Wisdom, episode number 79. I thought this might be the last one for the year, but given what we're covering today, I think this might need a follow-up one next week, so stay tuned for episode 80. But here we are, episode number 79, and all this big red chart on the screen. I couldn't walk away from it and have to talk to you about the Aussie dollar smashed. Huge US call on 2025 sends global shockwave. How many fear-based words can they get in one headline? What an absolute cracking headline. And let's go and see what it's all about. Huge US call on 2025 sends a global shockwave. And so what is it? Well, it's interesting from a number of perspectives. The huge global shockwave has been caused because the US just cut interest rates again by 0.25%. But in their commentary, they indicated that instead of seeing another 4 potential cuts in 2025, they now see only 2. And so that sends global shockwave. Wow. They're cutting rates because things are looking pretty good, but only 2 more planned for next year at this point, and that causes a massive sell-off in a whole host of things. So the first one, most relevant obviously to us Aussies, is that our Aussie dollar plummeted as a result. Another one of those fear-based words, because obviously the market saw the US dollar as a strong place to be. So the US dollar rallied, and every other currency tied to the US dollar suffered. And so the Aussie dollar down to low 62 cents for the first time since 2023. So for those that have been wondering, that is quite the sell-off. But the interesting part about all of this is it also led to massive sell-offs in the stock market. So we saw almost a 2% fall in the S&P 500, and that's transpired into the Aussie market today. So I'm filming on Thursday, and so if you're watching this on Friday or any other day, that's what I'm referencing, is that we saw the Aussie market's down a little bit under 2% at the moment during the day, but massive sell-off, mainly because the message from the Federal Reserve that they're only likely to cut rates twice next year is that they don't feel like they've necessarily completely killed off the inflation bug. And in a very subtle way, they've also indicated that they're fearful about the new US government policy when it comes to tariffs. And so they have wound back the aggression when it comes to cutting rates, and that obviously has led to an excuse, in my opinion, for the markets to sell off and take some profits, which is interesting. And so, as you can see, all 3 major Wall Street indices finished firmly lower. US dollar rose, Aussie dollar fell. Aussie stock market then fell. Then there's another warning for the Aussie dollar saying, well, we've got more policy meetings in the Bank of England and the Bank of Japan today. And depending on what happens there, that could put more downward pressure on the Aussie dollar. So that's an interesting take. And an interesting thing about this whole article is that the US, they've been proactively cutting rates this year. They've had 2 0.5% drops and now another quarter, because they've got inflation under control, or they indicated they had it under control, and they were trying to keep the economy, the US economy, buoyant. And if you've been following along on these weekly wisdom videos, you'll know that one of the struggles that we're having here in Australia is the reluctance of the Australian Reserve Bank to take action to stimulate our economy using the threat of high inflation, or stubborn inflation, I think they're now calling it, to keep the rates high. And they made no downward decision in December. So the next we hear from them is February. And I suspect we could be then talking about how maybe they left it a little bit too late, and they're going to be playing catch up as per normal. And so, this is all talking about, obviously, forward estimates, worried about the tariffs that could cut economic growth and push up inflation. So there's that slight little indication of what the Reserve Bank is thinking about the new government and their policies, and that boost that the share market saw post the US election. That bubble has just been burst, although we haven't dropped back below where they were before the election. So we're still higher than we were on the 5th of November. But a caution here that now that people are getting a little bit more of an understanding of the policies, there's a little bit more caution about the likely growth in the US economy, which will be interesting to see how this plays out in coming days. And ultimately, the Federal Reserve has said that they've been able to cut rates. They've been able to grow employment, but they're a little bit worried about the economy. They've provided a bit of a stimulus with the cuts, but they're a little bit worried that there are some indications that inflation is ticking a little bit higher and moving away from their target. And so they're very much about, let's not get too aggressive. We haven't completely defeated inflation. And if we see these new policies enacted, that could add to the inflation bubble, and we'll be back to raising rates rather than cutting them. And which, you're going to hear from the Reserve Bank in Australia that's why they're not cutting, and they don't want to cut and then have to raise again. But as I've been saying on these weekly wisdom videos, if they don't cut soon, they might have to do some very aggressive cutting, which is not necessarily aggressive cutting to stimulate the economy, and that's not what they want to do. They want to do it in a more controlled fashion. So something this year would have been nice, but the longer they delay it, the more we're going to see people struggling. And we've already heard announcements this week about the level of company insolvencies and liquidations growing to very high levels. And they're all the signs that people are starting to struggle. And so the next thing we'll look at is, what are the numbers for Christmas purchasing, buying? What are the sales numbers out of the retail businesses over Christmas? That'll be another indicator as I trip over my tongue nonstop. But there'll be another indicator to see whether or not Australians have really had to tighten their belt this Christmas, because the excess and the surplus money that they had built up in their financial scenarios is rapidly being erased by these continually high interest rates. And so they're saying there's some good news for the world's largest economy, saying that their growth rates are expected to be strong this year and a little bit less next year, but still pretty good. They expect unemployment to be okay, but there is one person here out of Pantheon Macroeconomics who thinks that rate cuts will come faster than the Fed expects, as they expect unemployment to exceed their forecasts that they're producing at the moment. So it will be interesting to see how that all plays out. And like I said, the alignment here with what's going on in Australia versus what they're doing in the US. The US on the front foot, cutting rates, trying to stimulate the economy and keep it growing. Australia, fearful of the inflation bug, and then just sitting on the sidelines and letting things potentially get perilous, and then they're going to be playing catch up and behind the eight ball and potentially cause events that they don't want to cause. So very interesting to see how this all plays out in coming weeks. And then they finish off talking about whether or not we're going to see a Santa Claus rally in the stock market. We definitely saw one this time 12 months ago. But I think with the way the stock markets have been this year, they've been up strongly, 20 and 30% here and overseas. That doesn't need the professionals, the finance companies out there, the money managers. They've got some good results to report, so they don't need a Santa rally. And so they're the ones that normally trigger it. And so they'll be sitting on the sidelines, potentially taking some profits and starting the new year with a lower base. So once again, next year, they can report positive growth as well. It's a game. We know they play it. Anybody who says they don't is kidding themselves. And therefore, this commentator suggests that maybe Santa is already on vacation when it comes to the stock markets. So we'll be keeping an eye on what happens over coming days and letting our clients know what it means for your stock purchases over the next couple of weeks as we move into 2025. And ultimately, what we've seen today is just a lot of profit taking, using a bit of news as an excuse to act. And really, the real news out of the US is they've cut rates. They've provided some stimulus for people in the US to free up a bit of cash to do a little bit more spending, or at least just have some slight reprieve. So it's a bit of a Christmas gift for those in the US, which we weren't able to get here in Australia. And I'm fearful that if we keep delaying those rate cuts, we may end up in a scenario where the economy is just run out of complete steam, and then it's going to need some rapid fire stimulus to keep it going. So we'll see how that all plays out next year. But for now, let's say that the market's had a little bit of a pullback to give everyone a bit of breathing space and an opportunity to get in at some lower prices. And ultimately, rate cuts in the US, good for consumers in the US, good for homeowners in the US, and let's hope that flows on to Australia early in the new year. So that is episode number 79. Would love for you to like, comment, or share this video. And if you're watching on YouTube, hit the subscribe button and the little bell to get notified when they're coming out. And if you're watching on Facebook or LinkedIn, give us a thumbs up to let us know that you've watched the video. Leave any comments you'd like, and feel free to share it large and wide so that more people can understand the headlines and what it means for their money and investing. And what I'm taking from this one, and what I'm suggesting you take from this one, is over the next couple of days, as these markets settle down, we're going to have great buying opportunities. So again, in 2024, the Boxing Day sales in the stock market have come early. Last year, they came in October. This year, they're coming in a more traditional December. And let's take advantage of those and lock in some great entry prices as the markets continue to grow over the next year, 5 years, decade, 20 years, whatever the time frame is that you're going to be in these markets. So hopefully you found that helpful. Let us know in the comments, and I will likely see you again next week for a wrap up of what's gone on post all of this, because I think it's going to be an interesting week ahead. So maybe we'll do one more before the year's out. Have a great week. Have a great Christmas, and I'll see you again next week. Cheers.